All right, so welcome back to the channel. I just wanted to review QQQ and where I'm going to start buying them. Recently, about 2 months ago, they pulled back to about 318 and they went all the way up to 376. So 318 is definitely going to be a potential bounce area. And I have the 2-year chart up right now just so you can see the support lines that I drew out in red. So 318 was a bounce, and that was a good spot to actually think to buy previously because you can see it right over here. Now, I just have this feeling that we might get a pop at 318, but I wouldn't be holding for another bounce back to 370. If you buy at 318, I definitely would keep an eye out and see where it goes. And if you do get that pop, I wouldn't be afraid or hesitant to take gains. I do believe, though, if we break this 318, the next pop that we're going to get is around 300 to 305 because right here is right where it was. And this, you have two levels of support, one here and one here. This would be kind of, I believe, a good area to start nibbling at QQQ. So I'm going to probably start buying around 305 to 300. I'm just hoping that the NASDAQ pulls back 25 more points because it's 325 right now. And it's pulled back from 400. So let's just be patient. Let's look for that pullback. But the first support area is going to be 318. That's definitely going to be a clear spot to see. There's probably going to be some resistance there, some support, trying to hold that level. But if the news with Powell speaking in May, we still have a good week and a half where it could potentially just keep being red. Hopefully we don't get any green days because I want more red so I can buy QQQ at a discount. The other thing I'm looking at too is when I'm trading stocks like QQQ, well, ETFs like QQQ, I'm looking at Apple, Tesla, Amazon, and Apple has not died yet. Apple is only at 161. And let me just bring this up on actual day chart because on a 2-year chart, you can kind of see everything clearly, but everything's trading below their 200 EMA now. So, but if you look at it's at 161. So I'm going to bring out the 1-month chart actually to make it a little bit more easier to see. But it's bearish. It went from 180 down to 160, and these are good prices to start nibbling, but I want to be a little more patient. I'm looking at Amazon finally breaking down below 3,000. It's at 2,800. I want to look at them at 2,500. And I also look not just Amazon, Tesla is holding up because they crushed their earnings, but with the overall market dying, I can't imagine they're going to still stay in the 1,000 range. And they did well in their earnings. They did great. And they had that nice pop up to 1080, but then that's what happens when the market is overall selling off. And if you look at TQQ, it has really sold off in the last month. I mean, 62 down to 41. So potential buying opportunity here, but I'm trying to be a little more patient because I think we're going to see a little bit more red before we get that nice pop. So we can buy the dip, sell the rip. And one more thing I'm focusing on is FNGU. And this is a very risky ETF. And let me just bring it up real quick. I am going to be buying shares of this. Not yet. I'm waiting for a certain price on it. Oh, there it is. And what is FNGU? That's a great question. All it is it's 10 companies within one ETF, and it's triple leverage, so it's very risky. But I feel like it's always with a caveat. And the reason I'm saying that is, I just want to bring up the composition first before I transfer this over. If you look at FNGU, its composition is, or holdings, I should say, is Alibaba, Google, Amazon, Apple. I'm not sure what this one is, to be honest. Facebook, Netflix, Nvidia, Tesla, and Twitter. If you look at these companies, and we'll start off with Baba. They are selling off, and that's why you see FNGU down to $12. Baba is down to $86, and I'm going to bring up the 6-month chart just so you can have a better picture. So 6 months ago, I mean, this stock was worth 120. I'm sorry, 120, like 170. And it used to be as high as almost 300. And then you had Google, which is definitely something I'm watching. But my plan is not to buy Google on the low. My plan is to buy FNGU. Because when Google pops, which we're getting this major sell-off. Look at Google, it's 30 on the RSI. These are all saying buy me territory right here. But I still believe we might get a few more days of red, so I'm trying to catch a low here, which is obviously not easy, but I'm trying to increase my chances. And now let's look at Amazon. Amazon, I don't know why it's not coming up. Hold on. There we go. So Amazon is 37 on their RSI, but 2,800. We want to see lower than 2,700. I want to see the RSI on a 6-month to 1 year mark below 25. That's like my all-in criteria. When the big caps are like below 25 on a 1 year chart, it's almost a no-brainer because they always retest the 200 EMA. So I am watching Apple, Amazon, Tesla. I want to see them pull back even more. And then I'm going to put money into FNGU, which is more high risk. So we're not going to do as many shares as we like, but it's also $12. So we can get up to a good amount, like a good 1,000 share position on these guys for a nice hold strategy and see where they go from there. The problem with FNGU is they have Netflix in it. And I'm not a fan of Netflix. And it's not just because of the recent news. It's just they just went up so much during the pandemic, up to like 700. If you go back on the tier chart, they were at 700 at one point, and now they're down to 215. And when you look at the 2 year, they're at 19 on the RSI. So they'll probably get a bounce, and that is actually good news for FNGU. But it's showing no signs of reversal right now. So when you see that kind of death, it's kind of hard to buy it because there's no sign of green, even though the RSI is 19. But I'd rather hold 10 companies in one like FNGU than just buy Netflix, because I believe it controls my risk a little better because Netflix is 10% of FNGU. And something that when the market's selling off and you're not sure what to buy, I mean, I'm going to buy FNGU. I'm going to buy 1Q, which is the NASDAQ ETF. And I'm going to put money in the S&P 500, FXAIX. I'm just buying those 3 ETFs. I'm not looking to time. I'm looking to time it, but I'm not looking to time the specific individual stocks. I want them all to hit a certain criteria, a certain level, like Amazon at 2,500 or 2,700, Google at 2,200, Apple at 150, because they're all going to go down together because the whole market's selling off. And if that does happen, that's when I'm going to start entering positions in QQQ around 300 to 305. I'm going to enter FNGU. Now, I'm not exactly sure where FNGU is going to go to, because if you look, this stock, this ETF used to be like $60, but I think we can potentially get it around $9 to $10, and that's what I'm really aiming for. So it used to be $50 a share. It's down to 12. It had a pop over here, so it is testing this level here around $12, $13. So it's not a bad entry to start getting a starter position of maybe like 250 shares. But I want to see if I can get like $10 on them. Might be being greedy there, but we'll see. And then I brought up QQQ, but I'll just show it one more time because I'm just scrolling through quickly. But QQQ right here, 318, but I realistically want to get them at the 300 mark for a support. And the 2 year show does justice for it. So you can actually see what I'm talking about. Right here is where I am making this decision to buy. And last but not least, let's just bring up the SPY. And the reason I like to play the ETFs is because they usually respect the EMAs, the 9, the 20, and the 200 very well. And the SPY, if you're going to play this one, your support level is going to be right here at 420. But if we get more red, you kind of have to have an idea of, are you going to follow a stop loss, or are you going to hold this long term in a retirement account or something? Because at 400, it's very difficult to see what the next support level is. I would say maybe around 380. But that's a complete guess. I'm just going based off of this right here. Because I don't really trade the SPY too much. I kind of buy and hold S&P 500 for long term. But if you're like a long-term buyer, I mean, it's great to be getting these prices on the dips. You should be dollar cost averaging into these. But I'm going to be looking to swing trade these, like a 1 week to 2 week trade. And then I just dollar cost average, obviously, to the S&P 500 into my long term. But that's what I want to bring up, the FNGU. That's definitely something I'm looking into trading because you got those 10 companies, and I think they can definitely get a bounce because when you look at Apple. Well, Facebook sold off, Netflix sold off, Google is selling off. So the minute that these turn green, FNGU is going to blast right back up because each company is worth 10%. There's only 10 of them in there. So if they continue to die, it's just going to sell off. But I think it's a good opportune time. You're not buying them at 50, you're not buying them at 30, you're buying them at $12 or 10 or 9 hopefully next week. That'll be the time to start getting in. So I just want to give my game plan. That's what I'm looking at. QQQ, FNGU, SPY. That's where I'm looking to make my entries. So I just gave a few entry points that I'm looking at next week that I'm definitely going to start chipping in and putting some chips in to work. And if you're trying to buy the dip, don't go all in just because you see a price. Slowly buy into it so then you can manage your risk. And if it drops more, then you can add more. And that's how I look at it. That's it. I just wanted to give my game plan for next week because I think it's going to be very volatile until Powell speaks May 3rd, May 4th, and makes his decision about those interest rates.